Guys, how are you? Andy, Sukhu, founder and CEO of Y2K Credit Solutions. So today I want to do a little myth busting, and I want to talk about how your credit card utilization affects your FICO and Vantage score. So first off, let's talk about credit card utilization, and this is how you calculate your credit card utilization. What you do is you take the aggregate of your credit card balance and divide it by the aggregate of your credit card limit, multiply that by 100, and it's going to yield a percentage. So that's how you're going to get your utilization, your credit card utilization. It's actually called your credit card your credit card ratio utilization, but there's different terms for it. Everyone calls debt to income ratio, whatever, right? There's other terms for it, but that's how you calculate your credit card utilization. Keep in mind, your utilization only counts for credit cards. Does not calculate student loans, auto loans, mortgages, or charge cards. It's only used for plastic credit cards, right? So now the myth, everyone is saying that, keep your utilization under 30%. To keep the score high. That's partially true and impartially true, because FICO requires you to keep your utilization, your credit card utilization, under 10% to keep your score high. Vantage score requires you to keep your utilization under 30% to keep your score high. So that's probably where that 30% utilization comes from. We talk about that a lot. We tell our clients, keep your utilization under 30% to keep your score high. And that's because when you speak to our clients and we look at their credit report, they have a misunderstanding of how to use their credit cards. So all of their credit cards are either maxed out or charged off, and that's the reason they end up in the situation. Also depends on the kind of credit cards you have and the credit limits you have, right? So FICO requires you to keep your utilization at 10%, and Vantage requires you to keep your utilization at 30%. Okay, so those are the numbers you need to know. Now let's talk about how it calculates on your score. If you get, ideally, you want to keep your utilization as low as possible. As low as possible to keep your score high at all time, right? But it's impossible, and you need to understand your statement date and your due date. A lot of you guys, and we've been telling a lot of clients to do this lately, that understand what your statement date and your due date is on your credit card, because that's going to help you out a lot. If you use your credit card and you pay it off right before your statement date, great, fantastic. When your score is recalculated at the end of the month from your credit card utilization, you're going to have a high score, right? But don't go, it's not necessarily important that you keep that utilization low. Use your credit cards, pay it, but you want to keep it low as possible to keep that score high. It's always going to fluctuate, always going to go up and down as you use your credit cards. But keep in mind, the higher the credit card balances are, the scores are going to drop, right? And the next billing statement, if you bring the balance under 30% or 10%, your score is going to go back up. So, a lot of people take that and run with it and say, I need to be at 1% or I need to be at 0%, and that's a bad thing. It's not bad. If you can stay at 0%, that's great. If you can stay at 1%, even better. But overall, the message here is just keep the credit card utilization as low as possible in order to keep the score high. And if you have any questions about this video on the utilization, drop me a comment. I'll answer it for you guys. But understand there's a difference between FICO and Vantage, and I think that's where the misconfusion comes from, because a lot of people are using Vantage. A lot of big companies are using Vantage scores now, right? Opposed to FICO. FICO is still relevant, don't get me wrong, but I've noticed in the industry recently a lot of people are using Vantage scoring models, right? So just be mindful of that. It's beautiful out here. Decided to do a scenic video for you guys today. Just be mindful of that. And again, if you have any questions about this, and here's some. Sorry, I keep going back. Right, I want to say something. If you have credit cards where your balances are $500, your credit limits are $500, it's kind of hard to keep that utilization low because you're using the card. One transaction can put you over that 10% or 30% utilization mark, and it could change your credit score. And it can get frustrating. Trust me, it gets frustrating because I have a lot of clients that tell me about it. They call and they say my score is not going up. And when we look at their credit cards, and again, this is only for plastics, does not include loans, charge cards, auto loans, student loans, right? This is only for plastic. And the only time it matters, the only time the utilization matter and that this number, this 10%, 30%, 1%, 0% matters is when your score is being calculated at the end of your statement, your billing statement for your credit card. That's when it matters, okay? So a lot of our clients have these Credit One, Capital One credit cards, and the limits are very low. The interests are high, but the limits are low, and it can be frustrating because one transaction can put your credit card utilization over that 30% threshold, and it can drop your score, and then you're back to making, some clients make minimum payments like $25 a month, not knowing that $25, out of that $25, 90% of that payment is going towards interest. So you're not seeing the balance go down, you're not seeing your score go up, and it gets frustrating. That's where you need to consider what kind of credit cards you're going to have, what kind of credit cards you need to have. You need to get into the prime credit cards. You can't keep staying in this prime credit card space because the credit's not going to grow. You're not going to be able to build your credit and get it higher score and have better data, better credit cards on your credit report. So you may have some stains on your credit report that needs to be resolved or removed to get the score going up. And that's where Y2K come into play. So take a look at your report. If you have any questions about this topic, drop a comment below and I'll try to get back to you about it. But, at the end of the day, just try to keep utilization as low as possible to keep the score high. All right. And make sure you understand your statement date and your due date. All right. Talk to you soon. Have a good day.